Hello and welcome, folks, to another webinar on Friday. I am super excited about this one. I am here with our dear friend and expert trader, Sandman. Sandman, how are you doing today?
Doing fine, thank you, Ryan. How you doing?
I'm doing really good. Is everyone staying safe by you? How's everything going with the whole lockdown?
Everybody's hanging on here. We're starting to emerge here. So
Yeah,
that's a good thing.
Okay, good deal. So I'm glad to hear everyone is safe and healthy. I'm really excited today. I just really quickly want to recap some of the things that we're going to be talking about today. We're going to be focusing on how to play off the squawk. Sandman is going to give some of his recent examples, different tools that make you money. And squawk is always at the top of the list, not only for you, but a bunch of other members in the room that we talk with daily, and as well as myself. So the first thing that I want to get into is some generalities on what you look for out of the squawk. And the reason I say that is because oftentimes I get questions from users that say, is there any way to filter squawk? The squawk to me is one of these breaking news tools where as soon as you hear something, you've got a very, very small window to capitalize on that. In some cases, that's not the case, but in other cases, as soon as something is made public, a stock will start to take off. And it really depends on what you're trying to do. If you're trying to scalp, you've got a very, very small window. If you're trying to set up a swing trade or a slightly longer trade, then you don't necessarily need to react in that first second. So when it comes to my own trading, if I'm looking for a very quick day trade, a scalp, something of that nature, I'm trying to react as fast as possible. When I'm listening for things that are newsworthy, that are actually going to move the stock over several sessions, I'm paying attention to what they're talking about. I'm thinking about how material that news can be. I'm watching the stock react, and then I'm looking up other information that may pertain to that. Sandman, I wanted to get your opinion on what you do. When you hear that squawk, what goes through your mind?
There's so many things that go into making that split second decision. Time, in terms of acquiring a lot of knowledge about a lot of different stocks. It doesn't have to be deep knowledge. It can be a cursory knowledge, but to have a general knowledge of what's going on. Has a stock been in play? Has something gone on with the business recently? Is there something about it being in a particular group? So if you know those things, and then another thing too, source is important. Is it coming from Citron, or is it coming from Bloomberg or Dow Jones? Is it coming from, I forget the other name of the trade something or other, or deal, what is it? Deal Reporter. It's coming from a reputable source. It's coming from one of the major news wires. Then I'm more apt to do it. So I'm kind of giving you like a stew of the things that might go into making me do it, right? But that's what happens. So when Ryan poses that question to me, it's very, very difficult to answer. I could answer it if somebody threw a specific one at me, then that's very easy to tell you. It's very easy to break that down. But just to kind of generalize about it, the only thing I can tell you is this, is if you were going to try to do this and master it, you're going to probably have a trial and error situation where, you find out what works, what doesn't work. I mean, I can try and tell you, but it's not going to be good as doing it. So when you do that, I don't care if you do it with 100 shares. You probably need to do it live. I don't think you could do it on paper and master it as well. But you do an amount of stock that isn't going to hurt you if it doesn't work. But then you can kind of get the idea for what works and what doesn't work. And a lot of times there are pitfalls because they'll take something down before they take it up. Yesterday was a good example. They came up with a story. What was it? Rollins. Rollins was seeking advisors, thinking about putting itself up for sale. Open, first move was it stopped trading.
What was the ticker?
Rollins, ROL. And it ended up really crashing. I don't know whether the rumor was denied or what. I'd never be around that long, so it wouldn't matter to me. But it wouldn't matter.
ROL? Gotcha.
ROL. So you can see what happened yesterday. Look at this. Look at that move. I mean, that's deadly. So I don't know if they came out and denied it, or it's looking to me like that. I didn't follow up on it because I wasn't in it. I didn't care. But on that first initial move, it stopped trading and then out of the trade down and then up quite sharply over 46. So it was below 40. It was below 45 after it. I thought about doing it. I didn't put it on because I thought it was beyond my risk tolerance. But it worked for about a point or so up. But then you can see what happened after that, and you can see why these things are so difficult. I mean, I'm assuming again that they probably came out and denied that. So you've got to be careful with something like that because that can happen. until something is confirmed by the company. That's always a possibility. One or the other parties can deny that it's true. In this case, there's only one party because it's them putting themselves up for sale.
So you said a lot there in the answer, and you actually answered my question exactly. I talk about this all of the time when I talk about having a trade plan, knowing your environment, know what you own, know what you're buying. Try to control as many of the variables as you can ahead of time before actually acting off of the Squawk. And you said something else there that I actually hadn't thought about, but you actually described exactly how I learned. When I first had the Squawk, I was new to it. I was new to how this information was being processed and delivered. That's another really good point because, again, knowing your environment, controlling your variables ahead of time. The coronavirus is a great example of that. Anything that has corona or COVID in the name is going to cause stocks to move. It reminds me of the blockchain and Bitcoin fiasco from several years ago, where people would just PR their companies and say, oh, we're doing blockchain or whatever, and it would cause the stock to move. The coronavirus had a very, very similar feeling. So know what you own. Know what you're trying to trade. And when it comes to things that are incredibly volatile by nature, when you add another layer of volatility on it, like a whole bunch of eyeballs reacting to a pandemic, that's going to cause this stock to move in unpredictable ways in some cases. Try to have a trading plan. And the other thing is if you don't trade off everything that gets squawked, that's okay. There's so much every day. You can't possibly think that you're going to nail all of it. Really, what you want to do is hone in on what you're most comfortable with.
This is what I want them to see because it really is the key to it all. Okay, so a couple of things. So the stock has the run in the morning, but it's not having a run. It's a big run. It has a huge run in the morning. And it's not just a run, but it's a run on massive volume. I like to call it hyper volume. It's just out of the ballpark in terms of what the stock would normally do. So it already tells me something. It tells me that it's got the capacity, the potential to run a lot more because it has that kind of volume. So that's always kind of the tip-off, okay? But then look what it does the rest of the day after it makes the high. It goes sideways, it pulls back, and then goes sideways for most of the day until about the first try at a new high was at 230, and it failed. It trades, it matches 98, pulls back, and then it makes a higher low at 95. It doesn't pull back to 90. It doesn't go back. It stops at 95. And I was able to cheat on this a little bit because 98's the break. But my thought is this, and I put this trade out real time. I said if it breaks 98, I think it's over one, and I'm looking to trade through that. So, but when it starts to come back up from 95, it's doing so on markedly heavier volume. And that's what allows me to cheat a little bit because I have a lot more confidence with that volume coming in like that it will in fact break 98. And I'm pretty confident if it breaks 98, it's going to break one, considering it's pent up all day and it's traded in this range. I did it very heavily. I had people in the room already know the story. I don't ever really talk about size or amounts or money's made or money's not made in this and that, but in this case I will. I bought 72,500 shares of this stock between 97 and 99. So I probably have an average cost of a little bit better than 98 as it turned out, but let's just say it was 98. It breaks one and it ran to 107. I'm out of that trade at 104. So you can do the math and see what I made, but I'm happy with that trade. I'm happy as a percentage. I'm happy in terms of the ease that it happened with. In other words, it was a pretty easy trade. I didn't really have to sweat it. And then I traded it more after this episode when it pulled back and then when it broke out again, but never in the same size. So, and of course, the next day it hit 6. So you can do that math too. But anyway, that was well, I have to be honest about it. I have to be honest about it. That was a trade for me. So
you're bringing up, I'm sorry to cut in here, but you're bringing up really, really good points. This is exactly what I just mentioned a second ago. You had a trade plan. You were happy. You said your average was right around 98 and you were out at 104, 107. What was that?
104.
104. Okay. So right there, saying that you were happy means that you actually had a plan. You were looking for what? Just a couple of pennies in this case? That's 6 cents.
Well, I would have been happy on a trade like that with that many shares. If it had come, I didn't know how dynamic it would be above one. You never know that. Sometimes they do that and they pull back again. You never can be really sure. So I would have been happy with something I would have been happy with even less than 104. As it turned out, it popped so hard that I was able to get maybe more than I would have even taken the trade for, because I'm not paying any commission. I'm trading a lot of shares, and in a very short period of time, that's a bit of money. So that's how I trade. I'm not advocating that style of trading to anybody else. I mean, I just lock in green when I have it. And obviously, if I had held those shares for the next morning, I would have had a few $100,000 more. That's okay. I traded it after that, but never in that size again. I do size, but smaller size than that. So that's the trade I took on that. But the point is, and I'm seeing the questions, how did I know when to go? I'm going to emphasize it again. The go signal is the volume. I know where the chart stopped. It stopped at 98. That's the price signal. But I don't care about that. I do care about that, but I care more about the volume that's accompanying the trade. Because if it's coming back up there on lower volume than it had in the morning, I'm not interested. And then you can see what happened after that. The volume just explodes and it's off to the races.
A lot of the times when you have these spots that have a whole lot of eyeballs, like you were talking about, 98 was the spot, or the dollar mark. Round dollar levels are often marks at which stocks have a battle. I've seen that in stocks that are very small in terms of their price, and also very large like Apple. So that's a universal thing. As soon as this breaks here, you can actually see it. It has like a pretty awesome green candle, but then it actually pulls back a little bit. And it comes back to that level here at 1, tests it, goes beneath it a little.
It actually traded, you know what it traded back to? It traded back to its
98.
break. It traded 98. Exactly. Perfect.
I was just going to say this dipped right below the $1 level, probably hit 98, and then it took off from there.
The Fed's liquidity, or I see people, they're pumping the market up. Maybe the market got it right. I mean, maybe we're going to return to work a little bit faster. That's what the numbers today seem to suggest. But it's good to kind of just consider that the conventional wisdom might be wrong. Very few people got this right. And you've got a lot of professional money that's short now. A lot of professional money. You saw Druckenmiller, you saw Tepper. These guys couldn't have been more bearish. They couldn't have been more bearish. And we could crash tomorrow, but they will have missed a 45% move in a couple of months. And that means they were wrong. You have to say, well, you know what? I got it wrong. I get things wrong 10 times a day. And if I don't admit that fast, I lose money. So I tend to kind of say, okay, I got it wrong, and I move fast. You move away fast. You stay. You do what you're right on. But you don't let an entrenched view take you down. You have to be very, very, I think, very, very, very open-minded about what might be causing things.
I completely agree with that. Thank you very much, Sandman. We had a ton to cover here. We got through a lot of it. We had a ton of questions. I really appreciate you taking time out of the day. As always, can we have you back at some point?
Yeah, absolutely. And I know a lot of you aren't getting questions answered, so I'm on at night a lot. So if anybody wants to, get in the chat room at night and ask questions away, I'm always available usually. I'll go all night if they let me.
All right. Well, thanks. That'll be it for this time. There will be more. Thank you, everyone, for joining us. I really appreciate it. Sandman, thanks again for joining us. And until next time, Zingers, remember, happy trading. It's very important that you understand what it is that you're trading, in particular the share structure, in particular the float.